South African Reserve Bank due to release its financial stability review later today. It highlights some of the biggest risks to our financial markets and our economy as a whole. Our business reporter Ntokozo Khumalo standing by. Ntokozo, good afternoon to you. What are some of the headwinds for the economy that the Reserve Bank has highlighted in the past?
Good afternoon, Stephen. Well, we are about to hear that in about the next hour or so. But, Governor Lesetja Kganyago did highlight some of those headwinds at last week's interest rates announcement. But to just give us an idea of some of the headwinds that the SARB is watching that could affect the economy, I am now joined by Nicola Brink. She is the head of financial stability at the SARB. Thank you for talking to us. Now, this report or this review is released quite often. Could you talk us through some of the headwinds to the economy that SARB has been noting?
Thank you, Ntokozo. Yes, we release the financial stability review twice a year, normally in May and in November. The purpose of the review is to look at risks to financial stability. So that's really the things that can make the financial system not function as it should. What we see as headwinds, as you call them, are largely the same as in the previous edition, but I would say that they have intensified. We talk about tight global financial conditions and tight domestic financial conditions. Interest rates have increased more and will be high for longer than expected. In the previous review, we talked about the grey listing by the Financial Action Task Force, or FATF. That has materialized. Now it's just about how quickly can we get off it. Load shedding has increased. That is a risk. We have even lower economic growth. Low economic growth and inequitable economic growth has been on our watch list for a long time, and the effects that it may have on the financial system. We've added, and then we had these perpetual kind of long-term issues like the effect of climate change on the financial sector, or the likelihood of a very large systemic cyber attack that could disrupt the system. We have two new risks that I would like to just mention. The one is a decline in the liquidity, the depth and the liquidity of our financial markets. We see that combined with capital outflows. And the other risk is the possibility of some sort of secondary sanctions to be imposed on South Africa in some way by the US.
And Nicola, maybe just give us a little bit more detail around the sanctions, because obviously that's a huge concern over the last 2 weeks with the geopolitical tension between South Africa and the US over the Russia-Ukraine issue. How could that really affect us? Because I assume that would not be in this review, but it would be in the review later on in the year, and how that affects the economy. Give us a little bit more detail there on how sanctions really put a risk or pose a risk to financial markets.
I think it will largely depend. Say it is done. We don't know whether it will. But if it is imposed, it will depend a lot on what is sanctioned. A worst case scenario is that it really affects our ability to make payments in US dollar, the type of sanctions that's imposed on Russia directly. It may not be that severe, but if it is, it will make it impossible to make dollar payments, and the majority of our trade and investment flows are dollar-based. It's our main trading partners, so it will have a fairly severe impact.
And one of the risks, of course, that were there in last year's review last November is load shedding. And as you said, it's one of those risks that are intensifying. At the bottom line, we know it's a risk to business, we know it's a risk to financial markets and so on. How urgent are the interventions needed there in sorting out the country's energy crisis to really move it away from being such a serious risk to the financial markets?
Well, I think that's almost a rhetoric question. It's overdue, it's very urgent. It's really starting to bite in the economy and financial institutions, directly and indirectly. So directly, they've got a lot more cost to incur. They can't conduct their business as they should. Some of the critical infrastructure like data centers and networks are down. Banking has become a lot more electronic, so that's problematic. But it also, as you mentioned, have indirect effects through the economy, through their customers and their clients. So it is really probably the most critical thing for South Africa at the moment, at least from a financial stability point of view.
Nicola, thank you so much for those insights. Of course, Stephen, that was Nicola Brink, who is the head of financial sustainability here at the South African Reserve Bank, just talking us through some of the risks that were seen in last year's review that, of course, was released in November. Load shedding making a comeback, and even more intensely so, and just, some of the interventions that need to be seen there. But we are going to hear from the Reserve Bank Governor in about an hour or so, just to highlight the review that will be out later on today, and it's the May review on what some of those new headwinds are. Of course, as she indicated, the possibility of sanctions because of those geopolitical issues that we are seeing South Africa being involved in, posing a huge risk to South Africa's financial sector. So we are going to get a little bit more detail on that, Stephen, and I will be back a little bit later on with those details.
Ntokozo, Khumalo, thank you very much indeed.